Hello and welcome to the trading zone. Welcome traders, welcome options traders, volatility traders, portfolio managers, just regular old traders of the world, people who are interested in learning about options markets and the stock market in general. Good to see you and happy Monday.
Hey everybody, I'm Brian Stutland here with my colleague Joe Tige. Both of us are portfolio managers for a couple mutual funds for our firm, Equity Armor Investments. We come here every Monday to sort of give our take, one, on the macro picture of the markets, but two, the volatility landscape of this market. The bread and butter of our trading strategies are always hedging and risk management. So we do that through volatility and owning volatility as an asset class, and we give you our take on how that affects your portfolio. And also at the end of the show, we have a live trade that we give to people. Some of these trades go out to some of our subscribers. Please go to equityarmorinvestments.com, check that out for subscriptions, and we will sort of digest that, update it, what our thinking is, and get into that at the end of the show. But Joe, what do we have going on this week other than your Tigers winning the series against my Cubs last weekend?
Yeah, who would have thunk two of the top teams in the Major League Baseball are my Tigers and your Cubs? What a fun series. I want to make sure thank everyone for joining us again. Our subscribers got a trade this morning. We're going to get to that at the end of the show. Stick around at the end of the show. While we're here, Brian, we want to educate anyone that's watching, viewing. If you're watching us live, I'd love to see a comment. I'd love to see a question. Feel free to do that. If you're watching us later, put it in the comment section. You know what to do with that. It's great to be here. Besides the Cubs and Tigers, did you see any other baseball this weekend? Do you get any Little League action in?
I did get a lot of Little League action. My little guy came through, won their House League championship this weekend, so that was pretty exciting. A bunch of third graders mostly on the team for a third, fourth grade level league, and they won the championship for our village. So that was kind of a fun moment for them. Our village puts on a great, through just volunteer network, being active in the community. They all put together a great show, a great championship game that brings the community together at the end. So that's really fun around the game of baseball. And what better way to do that? So that was fun. But now it's back to the markets, although quiet day so far, right, Joe?
Quiet day, a lot of data coming this week. We had a really busy week last week. I expect this week to heat up as news seems to just happen and pulls into this market before we know it. Let's take a quick look at what we were looking at. We mentioned, Brian, that our subscribers get our trades early in the morning every week. We're going to have updates as the week goes on. We also, for free, put out a weekly blog. Anyone watching can get this for free. Just subscribe to this Ripple Effect newsletter. And bottom line, Brian, is we had a lot of news last week. We had the big fight between two of the most powerful people in the world, Elon Musk and Donald Trump. They're fighting over the big, beautiful bill. That created some volatility. But now we're moving past that. It seems like the big news right now, Brian, is the riots going on in LA. So it's just like we had a big event, and now we're moving on to the next thing.
Yeah, it felt like, oh yeah, back and forth, Trump, Musk. Some things on X got retracted by Musk, and now we're on to the next news, which I'm excited. Really, we'll talk more about the CPI coming up, inflation, what that means. But yeah, these LA riots, I guess, kind of turn the page on news, and now people are kind of forgotten about what the whole spat was last week.
Yeah, so we had big news with the big beautiful bill maybe being in question with that fight. Big news over the weekend, talking about immigration and that policy. So it's kind of the whole narrative is shifting again, and I'm sure it's going to shift again this week, Brian. We've got big trade war implications today. We got the Trump team meeting with the China team in London today. Is that right? So there's going to be more talk. Really important for the tech world to see these rare earth minerals being imported from China still. So there's a lot on the table. So there's a lot at stake still.
Yeah, this could create a little bit of volatility if it doesn't come out the way we want. I mean, we've talked about this before. It's like two rivals, the Packers and the Bears, trying to figure out a trade agreement with each other. I'm not certain that we actually get to a clear cut, cut just one and done kind of thing before it comes out, but we'll see. But here, yeah, the meta, maybe discuss this because we want to get into AI, especially at the end of the show with our trade, right?
Yeah, I mean, with all of these scary things going on, you still see stories like this. Meta spending $10 billion, $10 billion with a B dollars to build up, to get their data up to snuff, to have a secure data spot with Scale AI. So it's just one of many deals we're seeing every week. Huge data center deals, huge, processing deals, power deals are all part of this big build out for AI. So it's really fascinating to watch this play out in real time. All of these worries out there, all these worries are still there, but the AI tech build out is still happening at the same time. And it's kind of a tug of war of who's going to win.
By the way, speaking of security, we own a cybersecurity ETF, ITA, and it's up tremendous this year. I still believe that's going to be a leader in this whole thing. I mean, you've got the data center play, you got the cybersecurity play, and then obviously the straight AI, LLMs and agents and all that kind of jazz. But behind the scenes, that cybersecurity play, I think, is still going to be very meaningful in this whole entire build out.
Yeah, absolutely. Well, let's bring it into what we got going on this week, Brian. The big kahuna, the big event of the week is the CPI this week. The PPI partners is going to be talking about inflation. Is inflation coming down low enough to a point where the Fed can say we can lower rates in spite of the fact that the economy is strong enough, or we're worried about inflation coming higher again? So that's going to be really big. Got the trade talks. There's a lot of other things that we're not really sure what's going to happen. That's just been the name of the game this year, Brian. We've had events popping up. We're out of nowhere that we weren't expecting, and probably we're going to see that this week.
Yeah, well, I mean, it seems like every month the CPI sort of turns the focus back to where inflation is. Is it under control? Can the Federal Reserve actually cut interest rates by the end of the year, like lots of traders are expecting? And so that's always been a market mover. And Joe, I think we'll get into a little bit. I want to discuss if the CPI comes in less than expected, is that going to create some upside volatility to this market?
Yeah, great question. Let's get into the volatility, Brian. Let's look at it.
Yeah.
We always look at this skew here. The skew is, of course, the volatility of the 25 delta put compared to the 25 delta call of the S&P 500 30 days out. This has come off a great deal, obviously, in recent weeks. We're still at a low level, kind of not giving us a huge clue that volatility is imminent right around the corner. Almost kind of like a green light here from the skew for me. What do you see here, Brian?
Yeah, I think our models have kind of triggered a moment here where we want to own some volatility, whether it's VIX futures or maybe even buying a call as a replacement to long stock. Maybe even do that with like a little bit of leverage. I'm kind of thinking because we did get a little bit of a breakout above 6,000 on the S&P futures that expire in June here in a couple weeks. So there is some upside momentum potentially in there. And you look at that skew. The calls are not down to the level where, you'd expect on the skew there where they're bid up. So I think there's still some opportunity to maybe grab that. But at the same time, there is a little bit of like sense of security here where you could get a, extreme vol pop to the upside and people clamoring for puts, which would drive the VIX up pretty sharply, even though the VIX is already at pretty high levels.
Sure. Yeah. Just considering on the lower end of this curve at the moment, absolutely can go back higher. But I think it's pretty clear we're in this range here, and we should expect this to continue throughout the summer unless something dramatically changes. This is exactly what we're saying when we're looking at this skew when we're at this level. Not really a concern. If we made a higher relative high here, it would have been a concern. But there was just a lot of reasons to just say, hey, things are looking normal here, and there's every reason to think that we'll be heading down here, and that's exactly what happened. So kind of in the same spot here. I think that's interesting to see. We made a lower low here. Maybe it's just a sign of things calming down for the summer months. We'll see if that plays out. That is what we were seeing for sure in these VIX futures curves, things calming down recently. Lowest curve is the current curve here.
Just look at that 2 months ago where the VIX was Up there, the VIX above 51, the front month VIX future in the 30s. Now we've
Yeah,
come
the
all the
first week of
way.
April was the worst. The
Yeah,
worst.
it really was, and that was just a little bit of time ago, right?
Yeah.
Everybody thought the sky was falling, and that was probably a time to look to put new money to work. We've talked about lots of cash on the sideline on these vol pops, and it's like triggered these rallies all the way back very quickly and sharply back to the upside. When you look at this here, this is what I mean about maybe upside volatility, Joe, because based on that skew index, I think both of us are maybe, we'll get into maybe some of the technicals on the S&P here, but I think there's some upside potential for the market, but I think the VIX futures will probably want to hang in there. If you look at mean reverting, maybe inching back up or holding this level because of where it was just a week ago or even a month ago, that sort of magnetism will kind of, I think, maybe firm the VIX futures up at this level here.
Yeah, it stands to reason, though, given everything that's going on, 16 would be pretty low for volatility here. So yeah, so this area is probably a spot where we expect the VIX to live here for the time being. Get above where we were a month ago. Maybe we have some concern here. Get above this 21 spot. Maybe we can get back to the worry area. The 16 to 21. I think this is what we should expect. There's going to be times like right now, which everything seems really calm. There's going to be times like 2 weeks ago when everything seems really crazy. We're gonna just live in that little bit of discomfort. And if we're able to do that, I think we're going to be prepared for some nice positive gains ahead. Speaking of which, let's take a look at the S&P 500. This is the active future here, Brian. What a run! What a beast!
Yeah, it really is. It got back above this level that I talked about, the 6,000 level, which was just slightly above the low, really, when you look at the beginning of the year, that little dip that we made heading into the start of 2025. Then obviously in Jan, we had back to a run up to new highs. And then the collapse that we talked about 2 months ago where volatility exploded. I think this little sort of small little cup and handle within this recent area here shows that if we can kind of hold this 6,000 level and move higher, I think it's going to take the CPI number to sort of trigger that to be sort of benign. And then that could lead to more buying. And when you get this buying with all the cash that we talked about last week that's sitting here on the sideline, you could have a surge of money coming in, volatility staying bid because the volatility actually is not compressing as it starts to move up. And is there anything you think like seasonality that could work in this way too, not just some of these technicals?
Yeah, of course there is. I just want to real quick point at these technicals, how nice this looked here on the way up. When we had this run up, we went through the 50-day moving average. This is kind of why I always point out, like not to chase here when we get these great events. We went through the 50-day moving average, just got a really fantastic opportunity on this pullback, was supported here at the 50-day moving average. The same thing happened through here on the 200-day moving average. We raced higher, got the pullback, another good opportunity here to get entry here. And now this really is looking strong here, making this shoulder a relative high here. This is, as you mentioned, anything seasonality coming up? Yes, we do, Brian. We have the end of quarter coming up. We're going to be watching that very closely. Options expiration on the third Friday is very important at the end of the quarter. We always talk about the JP Morgan hedged equity trade. This is a very large flow of options. We'll be looking at that closely next week, of course. But just in general, we talked about last week, all the cash on the sideline. End of quarter, portfolio managers have to window dress. They have to show what they're holding. They're not going to want to show so much cash on the sideline after we saw a fantastic April, a fantastic May for the markets. They're going to want to show they're holding some of these winners. I'm expecting some money to be flowing into some of these high-powered AI names as we go into the end of the quarter. So investors that are looking at what portfolio managers are holding are showing that they're going to be holding some of these big names that have had such a great quarter.
Yeah, and I mean, just taking a look at this chart, yeah, I think probably one way, like I mentioned, is probably buying a call somewhere. I think we're going to talk about that. Basically, I want to tease right now Amazon. That's what we're going to talk about on our trade of the week. I think there's maybe some upside potential there. You could use a call on Amazon. You could use a call here on the S&P to sort of get some leverage. But be nimble. You don't have to chase it, like you said. Although every time we've come back to these technical levels, it's touch there and go. So yeah, the NASDAQ, man, that even looks even stronger, doesn't it?
And look how just textbook this touch and go was on the 200-day moving average. It just kissed it and said, "See ya."
Yeah.
And we have this fantastic cup and handle. We're making, and yeah, another one right here, Brian. We broke out, made a new high here, and it came back down and tested that high. So we're kind of at another breakout level. I'd love to see it come up here and then test again, and then boom, rinse and repeat going forward. So just we're watching this very closely. We're actively trading this very closely, and the NASDAQ, we know, a little more tech heavy. Even more tech heavy than the NASDAQ is the semiconductor index. That's very front and foremost on the AI trade. NVIDIA really moving us closer and closer to the future. NVIDIA is the biggest holder here, which we traded last week. NVIDIA last week, we sold a put NVIDIA saying, hey, maybe we need to consolidate for a little bit of time. 2 weeks ago, remember Brian, we bought a call in Google. We're hanging on to that, hoping that we're going to see that ride out. Got another trade coming on. We'll be getting there soon, I promise, for Amazon. You'll be seeing that really soon. But essentially, Brian, I think it boils down to this. Okay, so JP Morgan out there is saying, hey, the risk is getting stronger out there. We're watching some housing index numbers. We're watching some of these potential risks in the economy. Maybe some jobs data still filtering through. They're reading the tea leaves to say things are slowing down. And last week we were talking about all the cash on the sideline. So we got all this cash on the sideline. A lot of worry out there. Yes, we've had a great run out there, but is there a risk, an asymmetric risk for an upside melt up where all that cash needs to pile back into the market? We get good news on multiple fronts. We get good news on CPI data. Inflation is lower than we thought. The Fed can lower rates. We get good news on tariff news. We got China and U.S. meeting today. We get good news on the big, beautiful bill finally coming through, where we're going to see deregulation and tax cuts and targeted spending to boost the economy. Is it possible all of these things are kind of coming to a head at the same time, and it's a perfect storm for a melt-up?
Yeah, and I think that's why we talk about here the VIX, trying to get down to 16 is, I think, going to be a difficult move for the market unless the market really can just sit at this 6,000 as a magnet, this big whole number on the S&P 500, and maybe that causes volatility in the VIX to sort of compress a little bit. But other than that, it seems like we're now at a more normalized level of volatility in the VIX, that it hangs in there, that we do get some upside. You bring up here the 10-year yield. That, I thought that failed to sort of move higher and was going to go lower. Now I'm sort of like, maybe not. So it's kind of sat around this 4.5% level, which if it got back up to like the 5 area range, I think that would maybe signal maybe a little bit of trouble, that the bond market was not absorbing liquidity as fast, that that people might look for higher yields somewhere else besides being in equities. That's something to watch. So I don't think it's giving any sort of danger sign yet, but certainly it seems like it struggles to go below 4% at any one given time.
Sorry, this is the 30-year yield up here. Yeah, I think these are really important. These are really important for our economy, really important for the stock market. I think lower inflation will, all things equal, pull these yields lower. There's two ways to interpret these higher yields, though, Brian. One is I'm worried about inflation. Another is, hey, the growth is going to be so strong, there's going to be inflation. I think there's two very different ways to think about that. So really strong economy and higher yields, that's going to be fine for the stock market. The market will be able to weather through that, especially going through this tech cycle we're going through with AI. If the narrative is, hey, inflation is going to just be out of control, the yields have to come up in spite of whatever the economy is doing, I think that's going to be bad for the market. So it's all about a strong economy. Best case scenario is going to be a strong economy and lower yields. I'm not going to say that's not possible, because that was what we saw the last 15 years prior to COVID and the Ukraine war. But it's certainly possible. Again, we just have to convince the market that inflation is going to be okay. We'll see if the market thinks it's possible.
I think when you look at these yields, if the CPI number comes in weaker, I just don't know how much the 10-year yield is going to come down in interest rate level relative to the front end of this curve, which would then deepen the yield curve out, which I think would be positive for the financials and some of the big money center banks.
Yeah, and the financials have done great. They're going to potentially do even better with a big, beautiful bill with deregulation. We'll watch that play out. I'm excited about that. There's also out there oil on the rise. Some people might see this as, hey, there's geopolitical risk going on around the world. I'm kind of saying it's actually a stronger global economy than people have realized lately. Geopolitical risks people know about. People have figured out how to get around all those conflict zones. We're seeing stronger growth out of Asia, stronger growth out of South Asia, and Europe had lowered their rates earlier in the year. I think the growth has been stronger. The economies around the world have been stronger than people had anticipated.
Yeah, I like ExxonMobil as a play here, given that, you look at that little head and shoulders bottom there in crude. Somebody doesn't have a futures account and you're just an equities trader. I think ExxonMobil maybe makes a lot of sense. The portfolio weight of energy, which is kind of interesting in the S&P 500, is not very high as a compositive to the rest of the market. But I might be willing to be slightly overweight that at this level. What do you think?
I completely agree, and I'm thinking it's more of I think there's more upside to go potentially in oil, and it's more about a global growth story than it is an inflation story. Final point here is the gold futures. Golds have just kind of been very flat the past couple of months. We gave a great trade a month and a half ago, how to make money in gold if it's going to be flat for a little while. It's been fantastic, just been consolidating here. This is not showing a sign that the market's concerned about runaway inflation. I think the CPI number might change this, but honestly, if the CPI is low enough for the Fed to lower rates, I don't know if that's going to be super moving in gold necessarily. Now, listen, it might be if the Fed comes out really dovish and says we're going to cut to zero, maybe gold will take off again. But if the Fed says, hey, inflation's calm enough that we can lower rates, I think gold might just find this level and stick around here.
Yeah. All right. So what, by the way, if anybody has a question, this is a great point in the show to go ahead and ask it. We're happy to answer. We do like to have like a little bit of back and forth discussion. So feel free to ask that, and we'll answer your questions before we get to our final end of the trade. Joe, what do you got here before we get to that trade? What do you got on the CPI, and what are you looking at?
We're coming down year over year. This is looking attractive. This is looking like where the Fed wanted to be. Is where the Fed said when they lowered rates in September, this is what the Fed said that it's going to happen. It wound up happening. We'll see. Are they going to stick with it this year? I don't know. Well, I think we need to see another low number though, Brian. And if that happens, this is just kind of like the perfect storm here for bulls here. There's just a lot of things happening all at once. Finally, let me just put a blade back on the table again. We got the CPI this week. We got tariff talks happening this week. We got a budget potentially going on this week. It seems really calm right now, but is there risk to the upside? And if there was risk to the upside, Brian, what would you do?
Well, I would trade Amazon. Amazon is a name. I think we've seen some lost leadership, or at least back and forth. Obviously, we talked about Musk, Trump, Tesla, but really Amazon they actually seem like they're getting their hands on everything. And Bezos, I feel like he's being more involved in the company because of this massive new technology front. You look at Claude, Anthropic, and the job that does when it comes to programming is excellent. When you talk about Amazon, it's got a consumer discretionary play, obviously, but it also has data center play, web services. So it's got everything. And oh man, that chart, doesn't that look good?
Yeah, another textbook support here at the 200-day moving average. I love it. Cup and handle. I love it. Bezos has some of the love too. Yeah, he stepped back in, is taking an active role. He's excited as we are about the future of AI. Amazon's building humanoid robotics. Where people thought Amazon's going to be the biggest customer of robots, they're going to have to buy from Tesla or wherever. Instead, Amazon said, no, you know what? We're going to build them. And I think they've really been building robots that have been, working in their factories or enormous factories for a long time. Now they're going to have a little bit more brain on them, perhaps, or be able to do a little more complex tasks. I think that's really interesting, considering they have the big factories. They're going to be able to test them out really efficiently. They have a huge library of data, just one of the biggest that we can think of, with Audible, with all of their books, their ebooks. They're just there, ready for them to use in their models. Are they going to be able to turn the corner and make that generative AI? I'm not so certain they will, but they're right there, right with the rest of them in terms of data when it comes to the large language models.
Yeah, and just looking at these technicals, right? Okay, so that really the one side of the shoulder is just above 210. The head, the upside down head, is below 170. So you're looking at almost a 50-point range, which would mean that a breakout here at around the 215 level, let's call it 220, could take the stock 50 points higher from there, which puts it at 270, let's call it, somewhere around that range, plus or minus 5. That puts it at a new all-time high. Does this happen tomorrow? It's not all going to be in one fell swoop, but the technicals are lining up for another potential 20% to the upside here for this stock. So I think there's a play to be had here. We talked about volatility probably not coming down too much further than where it's been at right now, that you could use an upside call to make this play. And I kind of want to do this now. I really do. I like it. I like it enough here. Here's some of the, just on the trade of the week. Obviously, it's position. If inflation's coming down, hopefully that means more money for the average middle America to spend, which plays into their consumer discretionary play. And when we look at violent moves to the upside, that's a call, because it gives you the right to own something no matter how high it goes, right, Joe? So what would be your trade and play to get behind this theory?
Yeah, I want a little bit more time. I want to, June expiration is going to be next Friday, on the third Friday of the month. So we want a little bit more time. We're going to go out into July. It gives us 5.5 or 6 weeks here to really appreciate a potential upside. I think this week could be a big move. However, if it is going to be next week, or if it is the end of the month, I'll be happy to wait that out for it to come to fruition. I do think the end of the month is going to look very strong here, though, Brian, with this, like we talked about, this end of the quarter rebalancing, this positioning, window dressing that I think is about to happen. So I'd love to wait that out, see a nice run up here. This is a 30 delta call. Kind of wait until this is an in the money call, if that were to happen, and then maybe sell the new 30 delta call, collect some premium, get in this trade for a spread. Hopefully we'll continue to rally for the rest of July, and then be fully in the money of that spread. Or if not, I'll be able to collect more than I take in here on this initial purchase.
So if you go to equityarmorinvestments.com, you can subscribe to this trade alert. You get an email sent directly to your inbox every time we sort of update a trade or we come up with a new trade. I think it'll be important when you own a call. Sometimes it's easy just to buy and hold it and take a shot, but there are times where Joe and I say, hey, look, let's take some profit, let's hedge it, let's do something else with it, so that the time decay, the premium of the call, doesn't decay away. Joe alluded to the fact that, hey, if this thing starts to go in the money, maybe you want to sell another call. So if you have a subscription to our service, you would receive that trade alert on how to further hedge or manage this position going forward. So go check that out. That obviously will be an important way to sort of handle this trade. But taking a look at this, I love this. You're looking at $3.80 is what, like a little less than 2% of premium over parity over the value of the stock. It's kind of like a lotto ticket. I hate to call it a lotto ticket because it seems like we're just gambling and taking shots, but it's so cheap it feels like a lotto ticket that it's worth playing this sort of head and shoulders breakout.
Yeah, absolutely. It's a fun one to watch. Amazon now up 70 basis points, up 150, back up to 215, continuing its march higher. For me, just watching the capital expenditures that Amazon has been putting out, they're just laying out a ton of capital to continue to expand their Amazon Web Services to continue to expand everything. And they have the whole package. They have the models, they have the software, they have the data, they have the computing power to sell out to other people looking to duplicate what they're doing. So Amazon is right in the center of this new revolution, and I think it's going to be an exciting time for them. And historically, whenever Amazon's made big investments, Brian, kind of foregoing their current quarters, foregoing their current profitability, Amazon has nailed it. They've done this time and time again. They've been able to build out, spend the money in the right spot, be ahead of the game to continue to innovate. And that's why it's so exciting to see what's going on in this world. So I think Amazon is right in the right spot for me, and I think this is going to be a good time to jump into.
All right. Well, we spent about a half an hour here on this show today, this week. Joe and I got to get back to trading and managing positions. But you can join us every Monday at 10 a.m. Eastern, and we come here live with this show. Tune in, get your subscription to equityarmorinvestments.com, get our newsletter with more information that will be fed right to your inbox. But more importantly, just tune in to both Joe and I here every Monday, 10 a.m. Equity Armor Investments put in through the Tradier Hub. Thank you for putting this on for us. And we will, come check us out on YouTube, Equity Armor. Also our Twitter handle at Brian Stutland and at Joe Tigay. So more information to come, but tune in every Monday. We'll catch you next week.
Yeah, have a great week and go Tigers.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.